Alright guys, we in day 2 of the boot camp, which is Fib. Alright, so your Fibonacci tool, right? Your Fib retracement, right? This is what your Fib is going to look like. You just click it and drag it out, right? So the Fibonacci tool, right? It is used to measure price pulling back to where you want to enter the market at, right? So first, let me get y'all the settings for this. Right, you just click this icon right here, Fibonacci retracement. You can start. When you start, it comes down at the bottom. Right, so cool. So these are the settings for it. And you would just copy these numbers. At the same, same numbers, same everything. Right, you can customize it. I highlight the 702. Because that is a common price, or that is a common fib level that price comes back down to before, or pulls back to before going the opposite direction, right? And I'll show you guys more of examples of price doing that, so y'all can see what I mean. But yeah, y'all can pause this, take pictures of it, because you're gonna need this when you draw your fib, right? All right, cool. So being that this is confirmation number 2, right? We are building off of the first confirmation, which is structure, right? So when it comes to a fib, right, based off of what trend the market is going, is going to determine how you draw your fib, right? So for this, if we look at gold, right, gold is in sales, right? We have a downtrend, which means we're looking for sales, right? Now this is a perfect example right here, right? This is actually this yesterday. This happened yesterday, right? So we have lower high right here, lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? Now when you want to catch this trade, right, you want to catch this trade or draw your fib from the previous high to the newest low, right? So right here, take your fib from your previous high to your newest low, right? So this zone, right here, this zone is called the optimal trading zone, right? As you can see, these are the premium discounted prices, right? That price pulls back to and then continues in the trend that is going, right? So the fib and the next confirmation work hand in hand, which is the IC candle, right? But I'll touch on the IC candle in another video, just to explain it and give y'all more examples, right? So with the fib, you draw your fib from the previous high to the newest low, right? You draw this fib as soon as you see this chart starting to retrace, right? So for example, like right here, let's see, let me try to click up a time frame. All right, let's delete this. So right here, chart is frozen, market is closed. So this is when you want to start your fib, right? For this next entry. Boom. Right? It looks like it's starting to pull back, right? And you would want price. Let me right here. you'll want price to come back into this zone, right? And then push and go this and continue in the trend that is going, right? So again, let me get my tools out. There we go. Right. The goal is you want price to pull back into the zone, sell when price pulls back into the zone, and then catch that sale all the way down until it makes a new low, right? So, and the fib is just a tool, right, to help you see the levels when you need to enter the market at. Let's see. I will show another example as far as like how this will look when the market is open. The market is closed right now currently, but I will continue. I will show y'all an example of real time, like what this would look like. Well, I'll do that. I'll say that for another day, right? So pretty much, right, all you're doing is looking at this setup over and over again, right? You just want to practice drawing your fib and looking at examples where price pull back into the zone. All right, so we have another setup right here. All right, previous high, newest low, boom, right? Y'all see here, price pulled, made a new low, right? We were making highs. We had a, let's see, break of structure down here, right? Lower low, lower high, lower low, lower high, right? Break of structure. Y'all see that? All right, this was literally what, yesterday? Yep. So look, we have our higher low. I'll mark it up for y'all again. Higher low. All right, we got our higher high. Right. Then what happens? Higher low, higher high, higher low, higher high. Pull back, break of structure, right? When it pulls back, it breaks structure to the downside, right? Now the charts have position to go the other way. Honestly, well, excuse me, the charts have permission to go the other way, right? And even in this pullback, this is all one move, right? So let me draw this again. Same thing still. Higher low, higher high, higher low, higher high, higher low, or lower low, my bad. Lower high, lower low, lower high, lower. That looks way better, right? Lower low. Alright, let's look at it again real quick. Higher low, higher high, higher low, higher high, higher low, or lower low, right? Breaks to the downside, right? When you see this break to the downside, right, you're catching the trend to go the opposite direction, right? So as soon as I see that break to the downside, right? Honestly, I could draw my fib at this point or that point, right? It still plays out either way at this high, because these are technically equal right here, and it didn't break down until it got to this point, right? But as you can see, it still hit 702 perfectly on the dot, right? So boom, once we seen our trend break structure to the downside, see, I have it right here. It broke structure to the downside. Now we draw our fib from the previous high to the newest low, right? That chart starts pulling back, right? We would set a pending order on our 702. I'll explain what that is in another video, so I can show y'all all in real time. We would place, basically this is where we enter the market at, right? Boom. So this, and then also I'll add in calculating your risk, right? So again, I showed in the bootcamp 1 the value of, you know, each pip, right? So you come over here, date and price, right? So when trading, right, you need to understand what you're risking, right? Because anytime you enter the market, let's say the chart doesn't go in the direction you want it to, you could lose that trade, right? So you have to always understand what you're risking when it comes to trading, right? Your stop loss will always be at the 1, right? And your take profit will be anywhere where your goal is. And again, I'll explain this in, you know, more in depth in another video. I just want to cover the confirmations in this one, right? So you will be risking 27 pips for potentially 215 pips and still going, right? So let's see, to do the math on that, each pip is worth $10, so just add a 0. It's $2,000 right here off this one trade, right? One thing that people you know, when it comes to trading, you can trade one time and be good for a week, right? You just need one trade. A plus setups is what they call them, right? But typically, you know, a lot of people, they can get scared out of a trade, right? Might not hold a trade. And honestly, too, when it comes to having a trading plan, you don't need all of these pips, right? You maybe just need 500, right? 500 is somewhere up here, right? You'd have been done with this trade, right? As you become a more experienced trader, you'll have, you know, the ability to hold some of these trades longer. Some people do it from the jump, you know. It just all depends. But it's good to have a plan, because hitting it big every single time is not realistic like this, you know. Everything we're doing in trading is probability, and you can only predict the market up until a certain point, because mind you, the market is ran by the banks, and when we get into institutional candles, you'll understand more so what I mean by that. You know, the banks can change the market, right? Politics or, you know, global events can also change the market, right? So things can happen where, let's say you see a setup, something happens, you know, in the world, and then the charts completely go, you know, just all over the place, you know. So again, we take advantage. That's why, again, in the first confirmation, structure should be super clear. Super clear. If it's not looking good, get off the charts, right? But again, I just want to touch on fib and just keep showing y'all examples of this playing out over and over and over, right? So let's keep going. All right, let's keep going. Oh, this is good too, right here. So let's draw this up. All right. So higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. Now, you don't need a break of structure to enter into a trade, right? You just need the previous low to the newest high, right? So I believe I actually got into this trade. Yeah, I think I got into this trade, right? So, right, I see candle close. Like, this is what again, confirmation number one. If it isn't clean, change the screen, right? Now, I do have multiple candle closes, which would make valid lows because I'm trying to figure out where to place my fib, right? But I'm seeing a little bit too much going on for me, right? So I just want to click up one time frame, right? Now, this is much cleaner to draw from, right? So I'm going to draw my fib at this new low, right? Because this is a valid low. I have two candle closes. So I'm going to draw my fib from here to here, right? Now, again, drew it from my low to my high. Same thing. All right. One second. All right. So boom. Higher low, higher high. Higher low, higher high. Higher low, higher high, higher low. Boom, higher high. Right. I'm catching it. Right. At this low. Right. Honestly, to make it a little bit more clear for y'all, draw like this. Still valid, still there. Right. Boom. I drew it from my low right here to the high. Came back, tapped me in at the 702. Boom. Right. Again, let's look at the risk. Right. So here, 56 pips times 10, you'd be risking 560 to make man 3,000. Mind you, these two moves are in the same day. This is all the 26th. This is Friday, right? These moves happen the same day, so you could have made 3,000 one way and 2,000 on the way down, right? We literally just went over this, all in the same day, right? That's the power of trading, right? That's the power of the strategy. You know, two opportunities to capitalize. And again, maximizing, that's $5,000 in a day. Like, that's just the power. That's just the what you can make. That's just the possibilities, right? But it's important to have a plan when it comes into trading because the moves don't move like that all the time, right? But again, to show y'all two back-to-back, you know, in the same day, it just goes to show y'all, one, the power of the strategy, two, the power of trading in and of itself. But yeah, right now when it comes to candlesticks and where to draw the fib from, right? You are only drawing the fib from wick to wick, right? So understanding structure is important to know where the previous low and the newest high is, right? Because in buys, that's what you want to do. You want to draw from the previous low to the newest high. And in sales, you want to draw from the previous high to the newest low, right? So you always drawing Just do it again. From wick to wick. Right? This wick to this wick. Right? So again, right, we want to make sure our pullback comes to within the zone. Right? 618 to the 886. As you can see, it did. Price pushed up, came back into the zone, pushed up again. Right? So that's literally that simple, right? It's other things to the strategy, right? But again, the first confirmation you need to trade, the second confirmation you need to trade, and the third confirmation you need to trade. The rest of the confirmations, right? You don't need them to enter trade. You only need 3 confirmations, but the additional confirmation gives you that extra oomph, that extra support, that extra confidence that, okay, yes, this trade is going to play out, right? But yeah, let's see. So we got our optimal trading zone. Price pulls back, shoots off, drawn fib, wick to wick. Y'all have the tools how to navigate the fib. Right, we got the settings again. I'll post the settings again. Oh, let's see here. Right. You really want price to pull between the 702 and the 786. Right. Sometimes even the 886. Right. The 618. Based off the strategy, it's cool, right, for price to pull back to that point. But you really, just back testing the strategy, you really want price to pull back into these deep discounted prices, right? When it comes to back testing, right? Back testing is literally doing this, right? You're looking at the move that already played out, right? You're looking at setups that have already happened, right? So let's keep going, right? Let's keep looking at setups, right? Right here looks good. Simple setup. We was in a downtrend, broke structure to the downside. Let's just draw it out for y'all. Show y'all some more examples, right? Broke to the downside, right? Boom, boom, boom. All right, so let's catch the trend, right? Have my high to the low. Right? My 2 green candles, right? That's a valid high, valid low. Same thing. Broke structure to the downside. It's a higher low, higher high, lower low. Lower than this low. Lower high, lower low, lower high, lower low. All right, let's draw the fib. We drew the fib from the previous low to the newest high. I'm sorry. This is for sales. We drew it from the previous high to the newest low. Right? High to the low. Price pushes down. Pushes back up. Right off the 702. Boom. Right? Then price reverses the other way. Right? But this is a winning trade. Right? Be risking 18 pips. Right? So that's $160 to make $680, right? So this is exactly what I mean by the power of the strat. Like, that's still $680, right? What if on this one you tried to hold until God knows how long, right? Then the chart reverses and claps you out, right? But you could have taken profit, 800 in profit, but you've been so used to taking you know, $1,000, $2,000. That, what about days like this, right? This, you still won the trade. The chart did what you wanted to do. But I'm glad that I can show y'all multiple examples where it's like, all right, yep, and this one you only got 680, right? The other moves 1,000, 2,000, you know, 3,000, 2,000, right? But this move, you know, you were at the end of the trend, right? It was already making lower highs and lower lows, right? You caught the end of it, right? And sometimes you don't know when you're catching the end of a trend, right? The chart is always supposed to go in that. It should always go follow this lower high, lower low, lower high, lower low, right? But when it breaks structure, right, sometimes it could be hard to anticipate when the chart breaks structure, right? Like having a strategy for breaking structure, right? Now, I will go over ways to understand ranges within a range, right? What do I mean by that? Right, so in this segment, we were selling, but I can show y'all, remember, confirmation number one, right? Uptrend, right? Overall structure, uptrend, right? So even then, look at this arrow. I have it pointing down because that's where you caught the sell. But overall, in that time period, we were bullish, right? But again, I'm on the 1 hour, clicking on the higher time frame, right? So, yeah, guys, it's just, you know, going over the fib, going over examples with you guys, and you can draw the fib on any time frame, right? You can draw the fib on any time frame, but why on the lower time frames? I'm glad you asked. These candles close within an hour, right? So let's say, and I actually am looking at this for Sunday when the charts open back up, right? Previous low, newest high, right? Boom. So when I expect the markets to open, I expect it to sell down again to buy up, right? But this is going to take time, right? Look at this, right? The 29th, right? The 28th, 29th, right? That's when these moves is going to be made, right? So this could sell down additionally for a day, right? If I know that these candlesticks take an hour, right? This is going to take some time for the move to get down here, right? But let's click on the lower time frame, right? So let's look at this entry, right? You see my blue line, right? This red 702, that's the same fib that I drew up on an hour. All right, let's look at that here. Y'all see it? Let's click down to the 3 minute, right? So boom. Currently, structure is showing sales. So remember, this is a good rule of thumb. You can catch the sale, right, to the buy. You can catch a sale to the buy, right? If structure overall, if the higher time frame is the overall structure of the trend and higher time frame trumps all, right? When I catch this sale, I might not want to hold it as long because I know overall we supposed to be bullish. We supposed to be going up. So I have a little bit more time, right, before the chart reverses. This is how you can sort of predict how far a chart is supposed to go as far as holding trades is concerned, right? So that was just a little nugget, right? It's a little advanced, but I think that you all will be able to grab that concept. If not, just come back to this video and just keep watching. Again, any questions that you guys have, you know, just write them down. Again, we'll go over it some more with you guys. Again, this is just getting out the strategy. But if everything makes sense, it makes sense. Let's see here, just quick recap, right? You're drawing your fibs if you are in a buy, right? If you're in a buy, right, you're drawing your fib from the previous low to the newest high, right? Previous low to the newest high, right? If you're in sales, you're drawing your fib from the previous high to the newest low, right? You're catching the pullback to sell down, right? Here, previous low to the newest high, catching that pullback for the chart to continue in that trend, right? Again, you want that pullback. Let's see, let me get my shapes together. You want that pullback to occur in that optimal trading zone, right? You want a good retracement into that zone so you can buy up, right? Or even here, right? You want a good pullback into the zone so you can sell down, right? You want your price to pull back into those zones, right? And this zone is the 618 to the 886, right? For sales, it's the same for buys. It's gonna look upside down, right? This for buys. Let me move this out the way. All right. Right, this is what your fib should look like for buys. Right, the 1 should be at the bottom, the 0 should be up top, right? This is what your fib should look like for sales. Right, the 1 should be at the top, the 0 should be at the bottom. Right? So again, you want to stick with the trend when you're catching a buy or a sell, right? You want to catch a sell when it's a downtrend. You want to catch a buy when it's an uptrend. You don't want to trade against the trend, right? High probability setups. The trend is the first confirmation for a reason, right? It's like doing, like if you was to sell when it's showing you buys, right? You're trading against the trend. But remember, ranges can be different on time frames. You're entering on the lower time frames because setups occur, structure breaks on the lower time frame first, right? But I just showed y'all the 1 hour example to give y'all an idea of how long you can hold that trade if on the higher time frame is showing a different range than your lower time frame. Both time frames are valid, right? It's just if you're trading in the 3 minute, the 5 minute, the 15, and the 1 hour, they all match, right? Higher probability you can hold that trade longer. That makes sense? Cool, right? Let's see. You want to draw your fib from wick to wick, right? And then also when we get into our next confirmation, we'll just touch on entries, right? Where do we want to exactly enter the market at? And yeah, right? So I hope you guys are able to start grasping the concepts. Again, if you guys have any questions, just write them down. Make sure you guys are taking notes. But anything y'all don't understand, you know, we're here for y'all. All right. See y'all in the next confirmation video.